Right friends, welcome back to Q&A discussion of banking awareness current affairs, and this will be there at least 2 times in a week, and this week, today, tomorrow, day after tomorrow, I am going to discuss on questions and answers discussion of banking awareness current affairs, and on Friday you have discussion of banking awareness current affairs, because this is very important when you look at banking services examinations and static GK, standard GK you can say. So, that we will start from next week. So, standard GK will come from next week. So, this week, today as well as Wednesday, Thursday, we are going to deliberate on this banking awareness current affairs Q&A discussion. The first question, Dinesh Sharma Committee was constituted to look into the aspect of here Dinesh Sharma Committee was recently constituted to look into the aspect of digital currency. So, the right option is digital currency, and here one important aspect is what are the rules and regulations to be implemented with regard to various cryptocurrencies. Bitcoin is one example of cryptocurrency. So, in future what should be the regulatory mechanism as far as cryptocurrencies are concerned. So, to look into these aspects, this Dinesh Sharma Committee was constituted, please do not forget, and India signed its first loan agreement with the New Development Bank for $350 million. This loan agreement, this is the first loan agreement. This is with the New Development Bank, NDB, it is a Shanghai headquartered, and KV Kamath is the president, and you can say this is a BRICS bank, and for the first time loan was given to India, and for development of district roads in Madhya Pradesh, this loan will be utilized. So, go into the details, because you can answer any type of question. Several companies are announcing buybacks in recent times. Several companies are announcing buybacks in recent times, especially software companies. Which of the following is not correct with regard to the buybacks? Buybacks means the companies announce when it wants to reduce the shares outstanding. So, buybacks, please understand, buybacks, the companies may go for buyback only when the environment of expanding the industry is not conducive. So, under the circumstances when the organization is not able to expand and the environment is not conducive for expansion, this is one thing. Second thing is, companies may go for buybacks so as to reduce the shares outstanding. Once the shares in the market are reduced by purchasing the shares, then what happens? Less number of shares will be available in the market. Because of that, what happens? The share price or earnings per share may increase. Look at one by one. Buyback refers to the purchase by a company of its shares from the marketplace. This is right sentence. They are expected to increase per share measures of profitability like earnings per share. Naturally, it is correct. Then they reduce the number of shares outstanding for a company. This is absolutely correct. The companies, whoever are announcing buybacks, cannot pay dividend. This is absolutely wrong. There is no relation between dividend and buybacks. Dividend means when the company is in profits, it can pay dividend, and please do not forget, dividend is associated with the shares, whereas the terms yield as well as coupon rate, these are associated with the bonds and debentures. Please understand, this is the question, and at the same time in the shares you will have ownership, and in the bonds or debentures the relation will be debtor and lender and borrower relation. Lender and borrower relation is there in case of bonds or debentures. Which of the following is not the financial instrument with the lender borrower relation? Here you see, bonds will have lender borrower relation. When I am purchasing bonds from Reliance Industries, I am the lender, Reliance Industries is the borrower. So, lender borrower relation will be there for bonds, debentures, but not for equity shares. Equity shares means you will have ownership. Look into the next one. Name the country which recently recognized Bitcoin and digital currencies as legal money. Recently, Japan is the country which recognized Bitcoin and digital currencies as legal money. Look at the next question. Recently, India and UK have decided to set up a £240 million green growth equity fund. Whenever you are encountering green is for basically for the projects where the emission of greenhouse gases will not be there. So, greenhouse gas emission will not be there. That means the projects which are not based on fossil fuel based energy. So, they will be funded under green projects. Here India and UK have decided to set up a £240 million green growth equity fund to finance clean energy projects in India, and this is a sub fund of NIIF, National Investment and Infrastructure Fund. So, this green growth fund is a sub fund of NIIF. So, NIIF, a question can be asked, National Investment and Infrastructure Fund. Here it will be with government shareholding of 49%, and this is India's first sovereign wealth fund, please understand. So, you have to answer in such a way, any question is expected on NIIF. Which of the following empowers RBI to establish DEF, Depositors Education and Awareness Fund? DEF means Depositors Education and Awareness Fund. Here the unoperative deposits for more than 10 years, when the deposit is not operated for more than 10 years, at the same time unclaimed deposits for more than 10 years, these will go to DEF, Depositors Education and Awareness Fund, and this money will be utilized for creating awareness among the public, and this is as per Banking Regulation Act of 1949, please understand. Next one is the main difference between reverse repo and standing deposit facility which is proposed in RBI's monetary policy. Standing deposit facility was proposed in monetary policy. Reverse repo is already there. What is the basic difference? Here reverse repo means when banks have got excess money, they can park with the Reserve Bank of India. That is the reverse repo. Standing deposit facility is also for that purpose only, to absorb excess liquidity, but the basic difference here is, here in reverse repo collateral security is required, and whereas in standing deposit facility collateral security is not required. So, here in reverse repo, when more and more money is parked by banks with RBI, RBI is required to give government securities as collateral, and when RBI does not have enough collateral security, then it is not able to operate reverse repo. So, as to avoid that situation, now this standing deposit facility came into focus. So, in standing deposit facility, there is no need for collateral security in standing deposit facility. So, the first one is the right option. NIIF is into the news. I just now explained what is the meaning of NIIF, and in NIIF government's shareholding, government shareholding in NIIF is 49%. Please understand, National Investment and Infrastructure Fund, it is government shareholding is only 49%, and you can say government is a minority shareholder here, right. Then banks can invest. We discussed last week about real estate investment trusts and infrastructure investment trusts, real estate investment trusts and infrastructure investment trusts, and here out of the unit capital of REITs and InvITs, I explained you REITs means the investments will be done in various real estates. They will collect money from people like you and me, and they will invest in real estate. Similarly, InvITs means they will collect money from people and they will invest in various infrastructure projects, and here banks can invest not more than -% of unit capital in REITs and InvITs. Here the answer is 10%. So, banks can invest not more than 10% of unit capital of REITs and InvITs. Next question is, banks are permitted to make direct investments in capital markets up to overall ceiling of, here banks can make direct investments in capital markets up to the overall ceiling of 20% of their net owned funds, right. Please understand these two aspects, these two are very important. Which of the following became the country's most valued state owned firm in terms of market valuation? Market valuation, or you can say market capitalization, that means number of shares outstanding in the market multiplied by share value. Now, after the merger of 5 associate banks as well as Bharatiya Mahila Bank, with the merger of these banks from April 1, now State Bank of India surpassed ONGC in market valuation. So, if someone talks about which of the following, or you can say which is the country's most valued state owned firm in terms of market valuation or market capitalization, is State Bank of India. It bypassed ONGC, and at the same time, if you look at public sector, private sector as a whole, the most valued firm is oscillating between Reliance Industries and TCS. Sometimes TCS is on the top, Reliance Industries is on the top sometimes. So, in terms of market capitalization, sometimes TCS, sometimes Reliance Industries, but now in government sector, public sector enterprises, SBI bypassed ONGC. Then real estate investment trusts, similarly infrastructure investment trusts. Please understand, real estate investment trusts, infrastructure investment trusts, these are regulated by Securities and Exchange Board of India. This is very important, and here the minimum unit size in real estate investment trusts as well as infrastructure investment trusts is kept as rupees 2 lakh, if I am not wrong, please verify this. Then the next one is, in recent times, standing deposit facility is mentioned in the monetary policy. I just now explained about this. Which of the following aptly describes a standing deposit facility? Here, the meaning of standing deposit facility is, you see, first one, for ensuring minimum deposit in the bank account, absolutely wrong. For absorbing excess liquidity from the banking system with government securities as the collateral, absolutely wrong. For absorbing excess liquidity, that means when excess liquidity is there in the banking system, at present the mechanism is reverse repo. So, for in addition to reverse repo, for absorbing excess liquidity from the banking system without the necessity of government securities as collateral, in reverse repo, government securities must be required to act as collateral, whereas in case of this standing deposit facility, this government securities as collateral not required, right. So, this is the right answer, and please understand, the mechanism of this standing deposit facility is still in the conceptual stage. It is yet to be devised, only idea stage. So, in our country recently some of the ideas have thrown at people. One is a standing deposit facility, it is still in the idea stage. Second one is universal basic income, UBI. Third one is Public Sector Asset Rehabilitation Agency, PARA. So, these three concepts emanated in recent times. So, in the examinations of banks, you can expect a question on SDF, Standing Deposit Facility, PARA, Public Sector Asset Rehabilitation Agency, The third one is universal basic income or UBI. Please don't forget these terms. Which of the following denominated notes are going to be released shortly? Here rupees 200 notes are going to be released shortly. Then please don't forget the places where plastic notes are going to be implemented, 5 places. At the same time, please don't forget 5 cities where petroleum prices are going to be revised every day from May 1, which is known as dynamic pricing. So, these things please don't forget. Normally, tech companies with 1 billion valuation are known as tech related companies with 1 billion valuation are known as unicorn companies. So, please understand, tech companies with 1 billion valuation, tech related companies can grow very fast. So, tech related companies with 1 billion valuation are known as unicorn companies, and at the same time please don't forget blue chip companies, the companies where shares are stable and at the same time the parameters pertaining to various parameters pertaining to the particular company are quite stable, and those companies are known as blue chip companies. So, unicorn companies means tech related companies with at least $1 billion valuation. These are known as unicorn companies. DB Shekar Committee gave its report and it pertains to defense. To improve the combat capabilities of the defense sector, this DB Shekar Committee was constituted. Basically, it pertains to defense. So, please don't forget. 18th Banking Ombudsman Office. I would like to tell you a few points. Banking Ombudsman Office. Banking Ombudsman can grant maximum award up to rupees 10 lakhs. And Insurance Ombudsman. Insurance Ombudsman can grant maximum award up to rupees 20 lakhs. And this Ombudsman Office, basically here Reserve Bank of India nominates this Ombudsman, and 18th Banking Ombudsman Office was recently opened at Ranchi. And at the same time, please recollect the instructions of Reserve Bank of India with regard to CCSO, that is also very important. Which of the following is not one among the cities where rupees 10 plastic banknotes will be introduced? So, plastic banknotes are going to be introduced in 5 cities. Please recollect those cities. One is Kochi, then other one is Mysore, then Bhubaneswar, then Shimla, and 5th one I am not able to recollect, but wrong answer here is Ahmedabad. Probably Jaipur is the 5th city. So, 5 cities, this plastic banknotes are going to be introduced. Please don't forget, and look into the next one. Name the first country which introduced plastic currency notes. As per the news reports, Australia is the first country of introducing plastic currency notes. Union Finance Ministry agreed for capital infusion of 8,586 crore in public sector banks. That too, weak public sector banks were selected for capital infusion of rupees 8,586 crores. You may have a doubt why this capital infusion is required and why central government is giving money. Basic point is, public sector banks means the banks where at least 51% of the ownership is held by central government. As the central government is the majority shareholder, it is the primary responsibility of the central government to look at the public sector banks. So, public sector banks, whenever they are into problems, it is the basic responsibility of the majority shareholder to look into those problems. And here, why capital infusion is required? Because as per the Basel norms, the banks are required to maintain overall 9% capital adequacy ratio by March 31, 2019. By March 31, 2019, 9% capital adequacy ratio is to be maintained, and for that they require capital, their capital is getting eroded because of losses, because of high non-performing assets, and moreover when loans are increasing, they require more capital. So, for all these things they require money. So, this capital infusion of 8,586 crores was announced for weak public sector banks, and government stated, please perform, then only we will look into further capital infusion. And here the answer is 1900 crores is given for IDBI Bank. Bharatiya Mahila Bank was merged with State Bank of India. It was established in the year 2013. Now, 5 associate banks and Bharatiya Mahila Bank merged with the State Bank of India, and because of it, as per the news reports, now SBI's position is somewhere around 45th, and in the country it surpassed ONGC in market valuation when you look at public sector entities. Look into the next one. Which of the following is not normally meant for merchants? Merchants, this is potential question in the examinations. Aadhaar Pay. Aadhaar Pay, what is required? Your Aadhaar number and fingerprint is required. With your Aadhaar number and fingerprint, you can pay to the merchant or shop owner. So, this Aadhaar Pay is meant basically for the merchants. QR code, quick response code. Quick response code means the code which is to be, you have to look at it, and if you download your app and subsequently if you scan through quick response code, then by entering the amount you can pay to the merchant. So, QR code is the mechanism of getting payment by the merchants. And the age old mechanism is POS terminals or point of sale terminals. So, Aadhaar Pay, POS terminals, quick response code, these three are primarily meant for merchants. So, the right answer here is UPI, or 1 is the right answer. Then, which of the following is insolvency regulator? What is meant by insolvency? The difference between insolvency and bankruptcy. If X has taken 100 crores loan, he is not able to pay back, he is into the losses, he is not able to pay back, that condition is basically insolvency. If it is legally ratified by some court, that is bankruptcy. So, insolvency, if it is legally ratified, that is bankruptcy. So, recently in 2016, here Insolvency and Bankruptcy Board of India was established. Insolvency and Bankruptcy Board of India was established, and this Insolvency and Bankruptcy Board of India is basically to look at insolvency resolution not only for the individuals but also for the companies, right. So, please do not forget this insolvency regulator is this IBBI, or Insolvency and Bankruptcy Board of India. Please understand the terms like insolvency as well as bankruptcy. Certain words from examination perspective, very, very important: arbitrage, hedging, insolvency, bankruptcy. So, these words are very, very important, and IBBI is the insolvency regulator, SEBI is the capital market regulator, RBI is the banking sector regulator, food regulator is there, FSSAI, and like that TROI is telecom regulator, civil aviation regulator is also there, pension fund regulator is there, like that you do not forget about the regulators. Right friends, we came to the end of the discussion of this questions and answers in banking awareness, and they will be highly useful for various examinations. Please do join same time tomorrow at 12:30. We will discuss another 24 questions in banking awareness, and standard GK we are going to start from next week. Right friends, have a nice day. Thank you.